Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Luton. Good morning, Lawrence. Hope you had a good weekend.
Good morning. Thank you. Yeah, it looks good afternoon, I should say.
I am in Barcelona for Avalanche Summit. So folks, if you're in town, say hello. Let's check in on Bitcoin. However, the CoinDesk Bitcoin price XVX index is currently at 41,262. Bitcoin falling back about 1% over the past 24 hours. The CoinDesk Ether price ETX index right now is at 29,180. ETH is climbing slightly by 0.8%. The DFX CoinDesk DeFi index is at 254, sliding back about 0.2%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, chosen globally as the leader in crypto news, events, and data. So, Lawrence, we did see a spike in Bitcoin before the weekend. Now we're seeing it fall along with DeFi, but ETH is turning around, still keeping it green.
Yeah, I mean, just as predicted, though. I mean, as I said, Friday morning, expect some volatility, expect some big price move of some sort. And indeed, we got up to 42,000. Again, still low volume. So I wouldn't read too much into anything at the moment. It's really hard to have an indicator when volumes are at a position where it wasn't several months ago, and that is much lower. So it's really hard to gauge what people's sentiment truly is. But we do have a guest later on who says otherwise, potentially.
Yeah. I do find it interesting that ETH is doing quite well in comparison to the rest of the crypto markets. It looks like, the ETH 2.0 update is coming along and people are pretty optimistic about it. Taking a look at elsewhere in the world, Russia and Ukraine still at war, of course, and Ukraine is refusing to give in to Russia's demands. They have surrounded the city of Mariupol. It could fall any day now. Very troubling. But they're also at the top of crypto innovation. So let's look in what's happening there with our spotlight.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Last week, Ukraine's government legalized a virtual assets bill. They're also piloting a digital hryvnia in partnership with the Stellar Development Foundation. Joining us now is Denelle Dixon, CEO and Executive Director of the Stellar Development Foundation. Hello, Denelle. Thanks for joining us. So you've actually met with President Zelensky. He came to Silicon Valley in September. Are you still in touch? Has development completely stopped for the digital hryvnia?
No, first of all, I just want to say, well, thank you for having me here. But what's happening in Ukraine is absolutely awful. We feel this deep connection because we have been working for so long with Zelensky's administration and with other folks and our colleagues in Ukraine. What we were doing was piloting a digital hryvnia. Zelensky made it clear that what he wanted to see in his country, and he wanted to do it over this year, but it was going to be really challenging to make that done, was to really move to a cashless society. So everything really digital and digital focused. And so we were piloting a program with Tascom Bank focused on the digital hryvnia, and they're still working. It is a remarkable set of people, and we're working with them, and we're still talking to the administration about things that we can do to help with the humanitarian aid needs that they have. But we're just amazed by all the folks in Ukraine and how well they've worked through this terrible tragedy.
Yeah, Denelle, thanks for being on. One question I have is, obviously, it seems like Ukraine has accelerated its adoption of cryptocurrencies. And I say cryptocurrencies because they have official Bitcoin addresses and Ether addresses where people have been donating to. Where is XLM on that list, and how much has been collected?
Well, what we're focused on with respect to the administration that Zelensky has put together is really the notion of a digital hryvnia. He really wanted to make sure that he maintained the importance and the status of his local currency. And so that's why we're focused there with respect to that. But I will just say, I am so impressed by how well, especially during this time of the terrible tragedy that they're suffering, that they have continued to really work on this particular bill that you just referenced is something that they had been talking about for the last year or so. And the fact that they got that through during this time is pretty remarkable. The fact that they're actually working towards accepting these donations and making sure that they can actually get this kind of aid into their country is just another sign about the innovation that they have within that administration and within the government there.
Do you have an update on, I mean, it is remarkable that they're even working on this despite going through a war in Russia and having to deal with a humanitarian crisis on their hands and this violence and unnecessary aggression. But so I'm wondering, what is the latest to update on how that program, the Digital Hryvnia pilot, is going, and when do you see it potentially being launched?
So I don't know the date of the launch, and this is something that we're going to continue to work with them on. But what's important is that there have been some disruptions with respect to folks who some of them can't no longer go into the office, and some of them are no longer able to have the access to it. So it is not as consistent as it once was before, and we are working with them throughout this. But so I don't have an update on timing of the pilot, but I just want to tell you that it is something that they're continuing to focus on. And as you can just see, just by the fact that they passed this digital assets bill, this cryptocurrency bill in Ukraine, this is still a really important part of what they want to do. And we want to just do everything we can to support the focus of the hryvnia itself and the strength of that particular currency there, and also just do what we can to support any of the humanitarian efforts that they have. So it is definitely one of those things that it's a work in progress, but with respect to the work with Tascam Bank and with the Ministry of Digital Finance, it's a pretty remarkable step forward that they're focused on all of these efforts despite what's happening in Ukraine.
Yeah, Denelle, definitely it seems though that they are accelerating, in fact, a lot of what's going on in crypto, primarily with purchases, because some of the people that they have to buy arms through or other military aid and humanitarian aid, they're accepting crypto such as Bitcoin and ETH. And I guess I'm wondering, are you looking at potentially accelerating this process through XLM on some level, through Stellar, to create that infrastructure that will ultimately be used in the future for a digital hryvnia?
Well, so from our standpoint, like we were never focused on the use of the XLM. Again, focusing on the strength of the digital hryvnia and the hryvnia currency itself. I will say though that we want to use the tool set that we have available to us. And just give one example, if you think about already the pilot that we have in the U.S. that's focused on getting the on and off ramp with respect to MoneyGram, that can be equally available in Ukraine and the surrounding areas for refugees. So we're definitely focused on using the tool sets that we have. And to that end, I do believe that they are escalating their usage of all of the different cryptocurrencies. But I do think that if you talk to Zelensky and the administration generally, they really want to ensure the strength of the hryvnia. And so they don't want to undermine that by having any other currency that comes in and takes over that particular the currency that they have there.
You also have some news. The Stellar Development Foundation is launching a $30 million matching fund. So you're looking at projects out there and folks who have raised whatever sum. If a lead investor has invested up to $500,000, you're willing to match that. You're focused on early stage fintech startups, as well as serving emerging markets in LATAM, Southeast Asia, and Africa. Perhaps you could tell us a bit about this program.
Yeah, it's a great program that we've put together. I think it's it's really focused on this notion of early stage, and it makes it so that we can actually deliver more and more investment into the ecosystem because of the fact that we're actually doing it as a matching fund. So this is just part of the enterprise fund, which is approximately like a $1.5 billion fund that we have and it's all available on our website with respect to in the mandate page. But this is part of it, which is the matching fund focuses on those local builders that already have they're backed by some VC or some investment, and we can come in and we can match it very simply because we can rely on a lot of the due diligence that fund has already done. So it's exciting to me. It focuses on innovation locally. It focuses on builders that are building locally and solving problems that they're focusing on locally. So that's what I love about this fund, and that's why we put it together.
So now, what kind of developers, what kind of builders are you looking at? What's the preferred who should be applying specifically?
Well, I mean, the truth of the matter is it's really hard for me to say like who in terms of the different innovations that are out there, but I'll tell you just a few that we are investing in with this fund. One of them is Bitwage, which is one of my favorite types of use cases because it's using the blockchain, using Stellar to be able to pay payroll internationally. And I think that's one of the, and think about like, although Bitwage pays the payroll internationally, there are other companies that might be focused on gig workers, and international payment of gig workers is something that I love to see used for blockchain use for. Another one is Trace Finance, which is focused on leveraging stable coins to be able to help startups in Latin America increase their access to funding. And that's a super fun one in terms of just not only are we funding a startup, but you're funding a startup that's helping other startups. So again, there's just so much opportunity to really focus on here. And it's just really thinking about the innovation and local innovation. So I always say that when we can't actually solve the problems from where we sit in Silicon Valley here. And so it's best to look elsewhere. And we can do that now with the matching fund in a really clean and simple way.
Well, by the way, if you need a connection over in Ukraine, we could always help out as well in terms of if you ever do want to set up an XLM address and instead of burning them, I think some of the humanitarian efforts there would definitely need it. So just keep that in mind. We'll connect you.
Thanks for that. We're doing our part to be able to help in Ukraine. We really care about that space. We care about those people. So we're doing a lot that we could do there.
All right. Thank you, Denelle. Very fascinating growth. And yes, we'll connect you if you guys would like to be connected. That was Stellar Development Foundation CEO and Executive Director, Denelle Dixon. All right. Coming up, we've got a crypto markets update with technical trends researcher Fairlead Strategies. All right, what's Bitcoin doing? The CoinDesk Bitcoin price XVX index currently at $41,320. Bitcoin sliding back about 0.75%. The CoinDesk Ether price ETX index at 29.24. ETH is rising ever so slightly by 1.5%. The DFX CoinDesk DeFi index is at 250. Also now on the rise, about 76 basis points. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Yeah, Bitcoin prices are kind of moving sideways right now, but what do the charts say? Joining us now to discuss the crypto markets is Fairlead Strategies founder and managing partner, Katie Stockton. Welcome, Katie.
Thanks so much, Lawrence. You too.
Thank you. So you sent us a chart. It's got a lot of things on it. So let's break it down a little bit here. You see support at around 38 and resistance around 45, correct?
That's right. So the 38,000 level comes from that chart, which has a shaded area on it, and that's called the cloud model. It's a very, very helpful trend following gauge that has particular relevance for anything that trades with deep global liquidity like cryptocurrencies. So we are focusing on the bottom bet. Go ahead.
I do want to ask about the cloud, actually, before you continue. What exactly is that cloud? It wasn't coffee that spilled on the chart, correct?
Yeah, it's based on, instead of moving averages, which is really a common source for most technical indicators, it's based on midpoints of price. So essentially, you're taking a high-low price range and taking the midpoint, and you're projecting it forward by certain parameters. Now, the idea is that you're getting a full look or complete look at the trend, but also support and resistance with a forward-looking element of about 26 periods. For those of you that know the technical indicators out there, the parameters for the cloud model are very, very similar to the MACD indicator, which is another common trend following tool. And we think that's based on the market calendar. So these parameters tend to hold value because of the market calendar. So we're watching it as a gauge of support right now. As you can see, prices above that cloud model, which shows the support around 38,000.
And so it seems like you also have the Fibonacci numbers here, and right now retracement about, it looks like a 50% retrace. It's at about close to 51,000, and you see that as resistance, and then 61.8 is 27 and change, 27,000 and change. So what's that about here? Where are you coming up with that?
Yeah, we're driving two different Fibonacci retracements on this chart. And the one that you highlight first is a resistance level around 51,000. If we were to see the recent highs of about 45,000 cleared, that would, of course, be a positive catalyst for Bitcoin, exacerbate the momentum behind the coin, and that would be the targeted level from that breakout. We've already seen the equivalent of that cloud-based support on the daily chart exceeded to the upside. So we do have a bit of a minor breakout, even though if you look over the past, say, 2 months or so, it looks more sideways. Based on that daily cloud, we do actually have a breakout in Bitcoin, which is why we've been bullish short term. It's really important in this market to reconcile time horizons. The reason we show the other Fibonacci retracement level of roughly 27,000, that's a support level, a secondary support level. So if we were to see that cloud-based support around 38,000 taken out, that would suggest that there's increased downside risk. So it's a bit tenuous in here because we do have a loss of long-term upside momentum behind Bitcoin alongside the equity market. We've really seen risk assets suffer that loss of long-term upside momentum. And because of that, while we're bullish short term, we have to be a little bit more nimble when we're trading these cryptocurrencies, a little bit more sensitive than average to the short-term and intermediate-term gauges that we use. So we always want to make sure to have those gauges on our side. And right now they are to the upside, but we'd be very respectful of any loss of short-term upside momentum and, of course, of any breakdown.
Katie, I was wondering if you could talk a bit about Ether. We see Ether slightly up this morning compared to Bitcoin, which is slightly down. And we have an impending proof of stake merge happening. What do you see for the future for Ether?
When I think about Ether, I think of it as sort of the risk on versus the defensive play in Bitcoin. So you do tend to see Ether outperform in general when Bitcoin is trending higher and vice versa. So it's really sort of a sentiment takeaway in that we're seeing more risk on from Ether. That higher beta nature of Ether makes it somewhat more appealing when we do have a bullish bias. So we have seen support hold there as well for Ether, that the equivalent level to that 38,000 Bitcoin is about 2,350 for Ether. And the initial hurdle is roughly 3,000, above which we're targeting 3,500. So we're really seeing a very similar setup in absolute terms, but in relative terms, if we do see some upside follow through in absolute terms, we would expect to see Ether outperform.
And what do you see about the volumes? Because right now, crypto markets have been in a wait and see mode. And so in terms of that, how are you interpreting, what we might see in the next 3 months or so?
It's really very normal in sort of a sideways trending market to see volumes contract. It's consolidation. Think about it as like a tug of war between the buyers and sellers and a period of indecisiveness. So I think it's that indecisiveness that's reflecting itself in the lighter volumes, the less decisive trending moves. And then it just becomes a question as to whether that consolidation phase is reconciled to the upside or to the downside. As said, we do think it will be reconciled to the upside with our short-term bullish bias. So we see it as a function of that, and we would expect with any kind of breakout, let's say above 45,000 Bitcoin, we would expect that volumes would come back into the market at least temporarily. And we say temporarily in part because of that long-term loss of upside momentum that's shared by the S&P 500 index, which of course is also rallying pretty nicely here. We do expect equities to see additional upside in the coming weeks alongside cryptocurrencies. And we've even seen treasury yields resume their uptrend. So it is what we believe to be a risk on tape, but really just from a short to intermediate term perspective within the context of that loss of long-term momentum.
So, Katie, let's bottom line this for the folks at home who might not be so technically analytical. Where do you see Bitcoin going over the near term and intermediate term?
Well, the indicators that I tracked, so that includes that cloud model and a couple of trend following gauges, including the stochastic oscillator that was pictured on that chart. We have a nice sort of posture in those intermediate term gauges. The takeaway is a little bit more decisive in terms of time frame. So the indicators are supporting upside over the next several weeks. So let's call it 6 to 8 weeks, perhaps, of upside for Bitcoin. I don't think it will necessarily be at a very strong pace, but if we were to see above 45,000, the targeted level becomes 51,000. That isn't necessarily a stopping point, but it would be a nice upside objective.
All right, Katie with the technical analysis and bullish forecast. All right, thank you, Katie, for joining us. That was Fairlead Strategies founder and managing partner, Katie Stockton. Coming up, we'll check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day and more on the CoinDesk mining series. We'll learn more on that with Aoyon Ashraf.
Hey, I'm Isaiah Jackson, host of Community Crypto and author of Bitcoin in Black America. You're watching CoinDesk TV?
Welcome back, and it's time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick. Happy Monday.
Good morning.
Yeah, it's Monday, as I said. So what are we facing this week? What do we have to look forward to or not look forward to?
Honestly, it hopefully will be a pretty quiet week. So, next week, of course, we have the House Financial Services Committee convening to discuss central bank digital currencies. As far as I can tell, there are no hearings that we need to be paying attention to this week. Really just kind of wait and see what happens.
Also, any follow-up with Congressman Tom Emmer? I understand he sent out a letter to the SEC last week to SEC Chair Gary Gensler seeking clarity on the SEC's information-seeking process.
Yeah, so this is kind of a long-running concern within the crypto industry in that the SEC in particular has been kind of regulating via enforcement rather than issuing guidance. Now, from one point of view, regulation by enforcement just means enforcing the laws that are on the books, but the crypto industry believes that the regulations that exist right now are somewhat inapplicable to the crypto industry specifically. And so, what they've been hoping for over the last couple of years across, two administrations now is some sort of concrete guidance that says, okay, here's when and how a company can issue a token, and here's how, you can operate within the law. Instead, what seems to have happened is the SEC has encouraged companies to come in and say, ask for permission or ask for guidance and ask for, assistance with specific projects. And then the enforcement division rather, will go out and ask them questions in turn. And, obviously, if you're trying to launch a project in compliance with the law, getting a call from the enforcement division is not ideal. So Representative Tom Emmer's letter seems to kind of be speaking to this and asking for more details about how exactly the SEC is operating on this level.
So, Nick, any fallout from last week's Senate hearing with, we had Kuna Exchange, we had Chainalysis, and they were talking about money laundering and evading sanctions. Anything come up from that?
We also had Senator Elizabeth Warren walk in the middle of the hearing, basically introduce her bill while grilling Chainalysis and then promptly leaving.
Leroy Jenkins. It was a real Leroy Jenkins moment.
Yeah, so, that bill's received a lot of commentary, I would say, over the weekend. The big question seems to be, what issue exactly is this bill solving? So we talked a little bit about this last week, and the provisions are, preventing companies from operating or, facilitating transactions for sanctioned Russian entities, as well as a currency transaction report adjacent provision in the middle. And we're still trying to figure out A, what kind of support there is for this bill, B, how it might be implemented, and C, again, what the specific problem that this is solving that, FinCEN and OFAC don't currently already have the power to address.
All right. Well, we'll see how that develops. Nick, thank you so much for joining us. That's CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, it's mining week at CoinDesk. All week long, a series of articles related to all things proof of work, stake, hash rate, environmental impact in the crypto mining sector will be published on CoinDesk.com. Joining us now to discuss more is CoinDesk US mining reporter Aoyon Ashraf. Hello there, and thanks for joining us. So, what can you tell us about mining week?
Well, mining week, it's the most exciting week of CoinDesk.
Of course.
We're doing a bunch of reports, a bunch of op-eds, and very cool packages that will showcase what mining is, why it matters, and the global scale of mining in the world.
We have a Mining Week photo essay. We have pictures from Norway, a mining facility in Sweden, as well as Quebec. And I understand you were able to visit the one in Quebec. Let's have a look at that picture. Tell us what you saw there.
Well, it's a combination of all the mining reporters and regulatory reporters and CoinDesk, Elisa Gitsi and Sandra Gama. I myself been to Quebec one, which is hydroelectric power, so it is renewable energy powered, which is obviously now a concern of the power consumption of Bitcoin mining. It is located in a town. Located in a town of about 12,000. It is a very small town, and there's one big industrial container and facility that's there, and that's Bitcoin mining. Good cool thing about a facility that is in a town in Quebec is that it's building it up, and it's called the bunker. The reason it's called the bunker is because it is actually bomb-proof. It was a distillery that was supposed to be built within a few years, and the parents couldn't build it, so they took it over. And I believe by the summer it will be all completely up and running, and it will be about 1 exahash of mining power that will come out from that facility. So it is large.
So near Quebec, there are issues south of it in Plattsburgh, in New York.
Mm-hmm.
Although where in Quebec is this? Much of that area gets its electricity from hydro, and it gets very cheap electricity. So that of course comes up against a lot of the residential concerns about all their free electricity or cheap electricity being used by these miners. Correct?
Right. Exactly. Yeah, and that's why Quebec for Bitcoin mining is because they have the hydroelectricity, which is obviously cheap. The miners also the hydroelectricity it's always for an excessive amount that Bitcoin can get it off the grid and use their operations to run it. That way, the grid stays. Not the case for some of the other facilities around in North Pacific.
And we also have a chart on the evolution of network hash rate of Bitcoin around the world. So you've been to different mining facilities. China for a long time has been the dominant player in the mining sector. Of course, last year, their hash rate completely dropped off the chart. You see that in yellow. And the United States, Kazakhstan, even Russia have taken up the reins on that. But where do you see that future headed?
More into the North America and U.S. specific. So this chart is I'll do mind you. This chart is from the data is from August from last year. So I expect the U.S. has gotten more of the market share of the hash rate right now. But first of all, the Bitcoin miners need cheap power. So in back before China. There was a lot of cheap power in the city and there's coal power that they could use very quickly. And China happened, and wherever the next is, that's where the Bitcoin miners are going to go, and which happened to be U.S., Canada, Kazakhstan, Russia. How a lot of unstable political situation in that Kazakhstan, and right now it's more coming towards U.S. and Canada.
Excellent. All right. We got in it there, but Aoyon, we also have to get you better internet connections. When you talk about mining, we'll have a better understanding of what you're saying. All right.
Aoyon, just to be sure.
Thanks, Aoyon, for joining us. That was CoinDesk U.S. mining reporter Aoyon Ashraf. All right. Also coming up this Wednesday, will Bitcoin mining decentralize? CoinDesk chats with experts from Maverick Group, Foundry, and The Block to discuss Bitcoin mining migration and decentralization on Twitter Spaces this March 23rd at 11 a.m. Eastern Time for Mining Week, all sponsored by Foundry. Tune in on CoinDesk's Twitter account for more. All right, let's check in with Crypto Twitter for our tweet of the day. And, Time's new cover man is none other than Ethereum founder Vitalik Buterin. Of course, the trolls had a hate, comparing him to a lesser form of Tom Brady, to put it very mildly, who Vitalik didn't even know. So Tom Brady upping the class on Twitter with this tweet saying, "What's up, Vitalik? You may not know me, but just want to say I'm a big fan of yours. Thank you for everything you built in the crypto world. Otherwise, autograph wouldn't have been possible. Hope I get to meet you someday. You're the GOAT, greatest of all time."
That's quite a compliment coming from Brady. Yeah.
Yeah. All right. That's it for First Mover. Thank you, Lawrence. I'm your host, Christine Lee. Meantime, check out the hash at noon Eastern and all about Bitcoin at 3 o'clock. You're watching CoinDesk TV. And next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Sweeping reforms are in the cards for Australia's crypto sector, so what can investors expect? Welcome to the Daily Forecast, March 21st, 2022. I'm Angie Lau, Editor-in-Chief of Forecast, covering all things blockchain. Well, Australia's plans for crypto regulation reform cover everything from taxes to investor protection. And Australia isn't the only country in the region where plans for overseeing the sector are developing, with South Korea and India on the case too. We're going to take a look at those stories and more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Well, today's keyword is regulation. So let's take a dive into what's happening with that around Asia. First up, in South Korea, preparations for the imposition of the Financial Action Task Force's travel rule are heating up. It all comes into effect in the country this Friday. And South Korean crypto exchanges are getting their house in order. Dunamu, the owner of the Upbit exchange, has signed a memorandum of understanding to link its Verify VASP solution to the code solution developed by Bithumb, Coin1, and Corbit. That link will allow users of the big four exchanges in Korea to make inter-exchange transfers once the rule comes into operation. The travel rule is a set of global guidelines requiring digital asset companies to collect and disclose customer information for transactions of over $1,000 US. It is intended to counter money laundering and terrorist financing. Now, South Korea says the rules will apply to all transactions of over 1 million won, or just over $800 US, starting March 25th. Meanwhile, in India, cryptocurrency investors in that country may soon face a hefty tax for every transaction. Local media reports that the Indian government is working to determine whether cryptocurrencies can be classified as goods and services. If so, then a different taxation scheme can be imposed on the digital assets. Now, government officials believe crypto trading is similar to gambling and lotteries, which incur a 28% goods and services tax, or GST. Now, currently, cryptocurrency is categorized as financial services, and as such, an 18% GST is levied on transactions on exchanges. Now, last month, India's Finance Minister Nirmala Sitharaman announced plans for a 30% tax on crypto income, as well as a 1% tax deducted at source on every transaction. However, the industry is still left craving clarity over crypto legislation, as the government has insisted that taxation does not mean legalization. Whatever happened to no taxation without representation? Well, I guess when it comes to crypto, India is still trying to figure it out. You can find those stories and more at forecast.news. But it's potentially right side up in the land down under. Over in Australia, reform is on the way for the crypto sector, with additional protection for investors and regulation for crypto exchanges and brokers expected to be key. Forecast's Monica Ghosh followed all the action.
The Australian government is beginning further consultation with the crypto sector, seeking advice and input on its plans for regulatory reform for the industry. One aspect it will investigate is the development of a licensing or custody regime for digital assets, with the Treasury considering compelling exchanges to hold investments made by Australians onshore. While the country's Council of Financial Regulators has also been tasked with reviewing the practice of major banks debanking crypto businesses. Numerous examples of crypto businesses repeatedly being denied service were included in last year's Senate report on Australia as a technology and financial center. And many of the reforms being proposed now are based on the 12 recommendations handed down in the Senate report. The committee behind that report was headed by Senator Andrew Bragg, who also spoke at Blockchain Week Australia earlier today, where he called for urgent regulation of decentralized autonomous organizations, or DAOs, as part of his Digital Services Act proposal. Bragg explained that DAOs can replace companies and are therefore an existential threat to the country's tax base, since they are not liable to pay company tax. The senator added that the intention of the reforms is to protect the public against malicious actors and signal that Australia is open for business. At the same event, the Minister for Digital Economy, Jane Hume, said the government is looking to introduce a licensing regime providing a badge of approval for crypto exchanges. The reforms are expected to be implemented by the end of this year. For Forecast, I'm Monica Ghosh.
In an interesting development for the world of tokenization and how it relates to legacy asset classes, the Spanish banking giant Santander has partnered with Argentina's Agro Token to offer loans backed by tokenized commodities like corn and soy. So could this be another sign of maturity for tokenization? And who better to ask than someone with a passion for tokenization, and that's Henry Chang, CEO of Fusang. Fusang aims to reshape investment markets with blockchain technology. And of course, tokenization is right up there, Henry.
Absolutely. Always great to be here.
And so this is a really cool idea of unlocking value in farms. And if you think way back to even the birth of financial markets, what was Wall Street except to, find a marketplace for farmers to interact with each other for future buyers and the yield, the harvest that they have. Now we fast forward to the 21st century. What do you think of this idea? How could it change the commodities market as we know it today?
It's great that you bring up commodities markets because, as you said, the initial idea behind things like commodity futures is so that farmers can go out and hedge their risk. It's meant to be around making physical supply chains more efficient, not just about financial speculation. And unfortunately, that's obviously a large part of what Wall Street does today. And as I mentioned, it's very exciting to see some banks starting to move back to the roots almost of saying capital markets in their original conception is there to allocate capital to interesting ideas and projects. That's capitalism. And unfortunately, I think there are too many people, banks included, who are still focused just on rent-seeking behavior and making money by being an intermediary and playing that role as a gatekeeper.
I want to talk about these agro tokens a little bit more, and these Santander loans could, of course, allow farmers to unlock their business potential. But let's take a look at how startup companies could also use tokenization to unlock their potential. Are the barriers for entry coming down across the board here?
I don't think that tokens can or indeed even should be seen as an exit opportunity or, quite frankly, as a get-rich-quick scheme. Tokenization is just another technology layer to, as I said, make capital markets more efficient, which in its original conception is about saying, I'm a company, I've got an interesting idea or a project, I need capital to help fund my company so I can actually build a real business. And this is as true for startups as it is for farmers. Same question, as you said, with these agro tokens. Farmers say, I need capital. I want to focus on running my business. Is there a more efficient way that I can go out and raise capital? And especially if I can start to do this from people who are stakeholders of my own company, right? Every farm has its own supply chain. If I can just figure out how I can turn some of these stakeholders into shareholders, I think then we will finally get a little closer to that original promise of capitalism.
Yeah, absolutely. Speaking of legacy assets moving into the tokenized world, and I know that you're pioneering so many of that movement. How about art here? There's undoubtedly a lot of buzz about the NFT space. There's also been a lot of criticism over plagiarism, theft, and what buyers are really getting for their money. What is that telling us about the need for an underlying asset to a token where unlocking value is concerned?
Just like how something like a security token is just a technology layer, and we always need to dig one step deeper and say, what exactly does this token represent as an asset? NFTs are no different. We've got fungible tokens, we'll have non-fungible tokens. And the question is, do these tokens give you either, number one, legal or contractual rights to some kind of underlying asset? Now that asset, it could be physical art, it could quite frankly be digital art. But again, making sure that the token actually gives you some kind of right or copyright or ownership, even of a piece of digital art, or it could have utility value. And I think both of those two things, either real ownership or utility, are very exciting in the NFT space. And to me, that's really where NFTs need to progress to, what I call NFT 2.0, where they start to be linked to real assets. And right now, the honest truth is that most NFTs don't work that way. It's a massive, massive problem. Again, no different than what we're trying to say in the security token space, which is the technology is very exciting, but make sure that your tokens represent something real.
Something real, something tangible. It is tokenizing the world after all. Henry Chang, always a pleasure.
Thank you.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.